Today, let's jump into crypto task force updates. Of course, I'm filming this remotely today, so hopefully I'll be back in studio soon. But we've got a special guest that's going to be a great one. My name is Paul Barron. Welcome back into the show. Let's just get into it, of course, with Commissioner Peirce. We have not had her on the show. So first of all, welcome in to the show. We appreciate it.
Well, thank you, Paul. It's great to be here. I do want to start with my disclaimer, which is that my views are my own views as a commissioner, not necessarily those of the SEC or my fellow commissioners.
Understood completely. Listen, we have a lot of people that follow this channel and our show. Of course, some of the biggest questions, I think, in the industry when it comes to investing all circle around the SEC and what's happening with crypto and blockchain as a whole. So obviously you leading the crypto task force, give us an update of where you guys are right now.
Well, we've had an eventful, I think, 6 months since we started in January. And the goal really when we started out was to do some of the things that I had been asking for the agency to do for a long time, which was really to take a more proactive approach to trying to identify areas where the securities laws do apply, and then working with people to get to a place where they could do the things they were trying to do in a way that was commercially viable, but also that was legal under the securities laws. And so really putting some meat behind the statement of come in and register, really enabling people to come in and register. Now, we have a lot of work to do, and some of the preliminary things that we've done really have been just that, preliminary. So I put out a long list of questions, about 50 questions. We've been getting lots of great written responses to those questions. I'm working my way through reading those, and others on the task force and on the staff of the SEC are reading those as well. And then we're meeting with lots of people, and we had a series of 5 formal roundtables where we brought people in with different perspectives to talk about these issues. And the goal then is to move on to rulemaking, and that will take a little time, notice and comment rulemaking. But we've also provided some statements, worked with the staff to provide some statements around some things that are not within the ambit of the securities laws.
Okay.
So you might have seen meme coin staking, mining, those kinds of things. So that's what we've been up to.
Is there any one particular area that seems to show the most efforts, or are you guys trying to, because it seems like you had so much to do. How do you pick what comes first or what you really focus on?
Well, prioritization is difficult, although we have a lot of people. So the task force itself is not big, but we have people throughout the agency who are working on these issues and have been working very hard on these issues. So within our different divisions. And so some of the prioritization, we can do all things at once to some degree because we do have different divisions working on different things. That said, we've gotten a lot of requests from the outside for no action letters or exemptive relief, and those kinds of things do require us to do some staging and prioritization. I wish we could do it all at once. We can't, and so that's the area where we're having to make some difficult calls about where to spend our time.
Yeah, I can imagine. Well, I mean, this has been a lot of pent up demand. There's also been a lot of pent up questions, and everybody trying to figure out what to do. So obviously, this first of all, is congratulations to you guys. This is a huge step forward, I think, in the industry. So we appreciate all the work. Let's get into the rise of the situation that is starting to brew, and that is 24/7, 365 trading. The progress around some of the regulatory hurdles that will be faced in this. What kind of hurdles are you facing right now when it comes to this particular area?
24/7 trading it's not surprising that that's where we're going, because everything else we do in our lives you can do at any time. We that's just how we kind of live as a society now, 24/7. So I think it's understandable that it's coming to the securities markets. We do have some work to do in trying to figure out how some of the legacy systems interact, because they're not designed to be on all the time. And so trying to understand and figure out where the operational difficulties might be is something that we're working through. And, I think a lot of people on the outside are thinking about these things too. And so we'll get some good suggestions from outside.
Yeah, well, listen, this is going to be one of the hottest topics probably for some time right now because there's so many companies within Wall Street, internationally, what we're starting to see in the European Union, obviously with MiCA starting to go in with their regulations. This is now putting a little bit of pressure on the entire investing community. Let's talk about private equity because this is another area that we think is going to explode. Tokenization, especially in the private equity space. You look at the growth that we've seen, these are just in terms of the number of funds that have been out there, how much is going into this space. Talk to me about how this could be unlocked through actions coming out of the SEC.
Well, I think tokenization of various things is on the minds of lots of people, whether it's traditional equities being tokenized or whether it's debt or whether it's private equity. I mean, people are thinking in lots of ways about how tokenization could be used. And one thing is it could make the whole process of issuing assets more efficient, right? It could make the process of transferring them from one to another more efficient, could make it easier to borrow against assets if they're on chain. And so I think that's what some people are thinking of. I do caution people to not assume that merely tokenizing something will create liquidity for it.
Right.
There are a lot of factors that go into that. And so I think, though, some people are hopeful that you could take something like a private equity fund and you can tokenize it and you can give more people access to it. We still have our accredited investor rules, and those will, they'll apply no matter if it's a tokenized fund or not. So I think that's something that people should be. They should realize that just because you tokenize something does not mean that the rules change.
When you look at tokenizing private equity and you think about the almost like the geographical locations of where a lot of these funds are being raised, they are seeming to center around certain parts of the United States. With that being the case, you look at the potential where maybe investors are centered in one space. What is the way that we could see this much more equal, especially here in the United States? It seems like, it's East Coast, West Coast, Southeast. Is there any opportunities there in the future for kind of leveling the playing field, especially for
Well, I
private equity?
certainly hope so. I mean, that's one of the reasons that I wanted to be on the commission, right? To try to think about how can we make sure that people all over the country are looking at our U.S. capital markets as being a treasure that they can actually use, whether that's as investors or as founders of companies looking for capital. And so
Right.
that has been one of the very difficult things to marry the people who have the ideas with the people who have the money. And I think that tokenization and other mechanisms for broadening and making the process more seamless could be helpful. But I think it really is a question of helping people build networks where they can get funds from those networks. And it's great if you grow up in a rich family or rich neighborhood and have rich friends, or go to a school where all the people who graduate are
Mhm.
rich. But it's for other people who just are brilliant and have great ideas but don't have those networks that we really have to
Exactly.
look for ways to unlock capital for them.
Well, you just said something I think that a lot of people would overlook, and that is the capital markets here in the US are a treasure. This is one of the best, well, it is the best by far market in the world. And for us to be able to kind of elevate it to the point where, all walks of life, all sorts of ideas can kind of get measured. Because listen, I grew up in Silicon Valley. I worked in Silicon Valley for a long time. I know what it was like in the early days of the birth of so much technology. And I do hope, with all you guys' efforts that this can kind of change because it has been kind of one-sided,
Yeah,
unfortunately.
and I
But
mean the pandemic, with all the bad things the pandemic brought, one thing that it did, I think, make people realize is that because everyone was connecting with people, even local people,
mhm,
via Zoom, they started to realize, wow, maybe I can look beyond my local area for for companies to invest in. And so I think that was positive, but we still have a lot more work to do on that front.
yeah, and the blockchain, of course, makes it even more global, because we have,
Right.
companies that are being developed here in the US. They're pulling in investors from all over the world as well as employees, so it is a different kind of of market, and definitely a different kind of workspace right now in terms of the workspace of idea generation, which is where capital
Yeah.
needs to be deployed.
Yeah.
So a lot happening.
I mean,
Let's
then
talk
of
about.
course just to go back to the underlying problem. I mean, I do think the accredited investor definition is part of the problem also, because it
Yeah,
is very much calibrated for people who are working and living on the coasts. And I'm from Cleveland, and I know that people in Cleveland don't make the same kind of salaries as people on the coasts do. And so I find the accredited investor, just that having that thing in place based on wealth and income is problematic in itself, but
right.
it is especially problematic when you get to parts of the country where salaries tend to be lower.
No doubt. Let's talk about other challenges that the industry has faced. One that goes back, I think, and is at the heart of where most of this young or youthful investor strategies have started to build started at a little company called GameStop. And, 5 years later, here we are. And now maybe tokenization makes a strong case for this because of the problems that happened during that. Do you feel that that could be a fix for those kinds of issues in the future?
I mean, I think it's an interesting thought to see what tokenizing stock will lead to, and it may be able to address some of these concerns. I think there's a lot of work that needs to be done around tokenizing, and that's why I'm happy to see that people are experimenting with it. But it does raise the possibility that it makes it easier to track a share, to figure out whether a share has been borrowed.
Hmm.
And so I think there is some potential there, but there's just a lot of work that has to be done. And there are a lot of different models of tokenization that are being experimented with. And so we'll just have to see how that shakes out. I've also wondered whether tokenization could be helpful in enabling companies to communicate with their shareholders more easily than they're able to now, and maybe can help with some issues around voting as well. So I think there's just a lot to be investigated there.
Well, is if you look at some of the, I won't say tests, but at least some of the early ideas that are coming out of the industry, is there anything that you gravitate to around a model that you feel could work?
What I'm really trying to do now, and I think what we're trying to do at the task force, is not try to have the government pick the model that's going to work,
Oh, okay.
but allow those models to be organically tested by the market.
Mm.
I expect that we'll see gravitation toward a particular model, but I really want that to be market driven. I'm a believer that regulators typically aren't the best ones to make the decision of how it should be done.
All right, we're going to get into a topic that's very near and dear to our audience's hearts, and that is around fee sharing tokens. All right, so this could be meme coins, this could be traditional blue chips, everything that's out there, earning yield or giving some sort of thing. And many people would say that, hey, this is if if you're getting any kind of payment from that token, then it's potentially a security. The argument, of course, gets into things like loyalty rewards, all sorts of gambits out there that are in modern day society already that are paying you rewards or you're getting some sort of value in return. Are meme coins considered a security?
Well, we put out the Division of Corporation Finance put out a statement saying that meme coins, again, facts and circumstances matter, but typically the meme coins that we've seen have not been securities. Now, you can take something that's not a security and you can offer it in a way that makes that a securities offering, in which case you've got to comply with our rules. But that's true of any kind of object, whether
Right.
it's a meme coin or something else. So, you do have to look at facts and circumstances.
Well, I think this is going to be one that is going to be interesting to watch because there's so many companies that are now trying to figure out how to utilize the blockchain in terms of loyalty. So whether you look at major corporations, McDonald's has started to go in this direction. Starbucks, of course, attempted this with their program launch a few years ago with Odyssey and their NFT model. But again, it was yielding out revenue, and eventually it created some sort of value that holders would have. So I'm very intrigued at how
Right.
this is going to develop.
And I mean, again, I think it depends how something like that is designed. And I do encourage people who have ideas for, companies that are thinking about a program that they'd like to develop, and if they have questions around whether that might trip the securities laws, please do
Hmm.
come and talk to us. mean, we are looking for ways that we can provide guidance and help people think through these issues.
Yeah.
A few years ago wrote a dissent, a couple dissents actually related to NFT projects where I thought that we were not applying the securities laws the way that we should have. And I think it really is exciting to think about how different companies could use NFTs to build fan bases and cultivate their relationships with their customers, or there are lots of different potential uses, I think, and I am excited to see those. And so, again, if people do want to come talk to us about those, we're open to having those conversations.
Well, it's good to hear. I want to talk. Actually, I've got a clip I want to play for you. It's around accredited investors, and I want to get your opinion on this. Give us kind of a framework, because this is where it gets a little bit interesting for the future of finance. Let's go to that clip.
You're a startup and you don't want to make any disclosure. Well, maybe we put like a red skull and crossbones when we're sort of like presenting that asset to customers.
Equity crowdfunding, the idea was that you could go and create kind of that skull and crossbones level that Vlad is talking about there. But you can't get those on a standard exchange. You have to go to a specific place to find them. And if we were able to have a more kind of unified system and ease the path of entrepreneurs to be able to raise the money, being able to do a stock offering as quickly as a meme coin is a wonderful thing. You're probably limited to offering your token to people who make over $200,000 a year. That doesn't work. 10 and 20% of the population now qualify to be able to make those investments. But that means most Americans can't invest in private investments.
All right, accredited investor, as you can see, that was Ms. Schulp. She's talking about that very issue that has been raised for quite some time, and this has been a problem in the industry. Where do you think this is going? How are you guys going to potentially address this challenge?
Well, I do take a position that, as I said before, that accredited investor, a threshold that is based on wealth and income, is inherently problematic from an American liberty perspective. But right. I think that given Washington realities and given the realities of how that accredited investor test came to be in the first place, I think what is more likely is that we'll continue to experiment with ways to expand the methods by which someone can become an accredited investor and then have access to more investment opportunities. I do think that if I were trying to design this from scratch, what I would do is I would say, look, you can have public markets, and people generally will invest in public markets, but anyone is free to opt into private markets with the understanding that they're not going to get the same set of protections that they do in the public markets. I think the benefit of having private markets and public markets side by side is that it can show if there's something wrong in the public markets. And I think that we are seeing signs that there's something wrong now in the public markets. We're not seeing companies decide to go public early in their lives. And there are a lot of reasons for that. We don't have time to talk about all of them here. But one of the reasons is that I don't think the SEC has gotten the regulatory balance right on public companies. Mm-hmm. And that's something that I'm really enthusiastic about seeing the SEC under Chairman Atkins really tackle and work on.
Okay, well, we definitely want to have you back on that topic, because I think that's a huge topic to address, because there's a lot of, to your point, both public and private, we get this a lot, mainly because most of the companies that are in the blockchain industry have chosen to stay private, and in some cases international, mostly because they've been pushed off the United States because of the regulatory constraint. But that's changing now as we move forward. Now it feels like it's a new dawn, so I'm very excited about that. With that in mind, let's talk about tech stack for the SEC, because this was a recent issue that occurred. You guys put out a bulletin. We saw, an immediate impact on SBET, which is a company out there, Serpent Gaming, real-time notifications of what's happening in the market. What are you guys doing to deal with that issue right now in terms of the tech stack that you guys are using?
Yeah, I mean, the SEC is constantly investing in its technology. And I think one of the reasons it's really important is because we do have the Edgar system, which is where people are getting their information. And so we need to, make sure that that is working as well as it can. We were talking about 24/7 trading earlier, and again, that does raise some new challenges. Companies usually wait till after the close of markets to make big announcements. Now, what's going to happen when their markets are always trading?
Always
So
on.
I think we've got a lot of issues to think about. Good technology is very important at the SEC, trying to make sure that we're only using Edgar for the purposes it should be used for, which is, around these disclosure issues. We also sometimes collect information that's not intended for public disclosure through Edgar. That doesn't make a lot of sense to me. So if we can focus Edgar on what it's meant for, and we can invest what we need to make sure that it's top notch, that's, I think, what we should do.
What about real-time alerts? You think about I'm thinking cross-chain when you get into things that are happening across all these different blockchains that could get into, this is an example we're showing on screen right there with MetaMask using kind of a push concept and notifications to investors. There's a lot of capability that is built into these systems right now. What about doing something like that?
Well, I think that that's some of the interesting promise of this new technology, is that I do think it allows for interesting new ways for companies to communicate with shareholders. Now, there's a lot of securities law out there that we have to think about in terms of how that matches up with the requirements that public companies have. But the potential is really there. I agree, to get information to people more quickly. And I think
Right.
That's one of the areas where sometimes we think about new technology and we think about it in terms of all the problems it's going to create for regulators to deal with, but there are also some real potential benefits that come with new technology that can enable us to achieve our regulatory objectives more efficiently and effectively.
This tech, when you look at people who have been in the technology industry, and I talk to so many that, kind of birthed in the birth of the internet, and every one of them have all said this is a major technology leap forward. There's a lot of opportunity here. So hopefully you guys will be right there at the cutting edge of where all this is going.
Well, regulators are usually not at the cutting edge. I mean, I'm just going to level set here a little bit, but
yeah.
This is why it's so important for us to keep the conversation with the outside going, because we're going to, we need to be tracking what's happening in the market. We need to be talking to those technologists who can help us think about how we can do our jobs better too.
Hester, do you think Congress should just ban KYC, especially where we are right now for investors? I mean, this is almost a privacy issue. There's all sorts of things that are kind of coming into this. What are your thoughts on that?
I'm glad you're raising the issue, because I think we don't spend enough time thinking about financial privacy and the importance of financial privacy to Americans. I think we've ceded a lot of ground there and sort of treated it as if it's not important. I would like us to take seriously the privacy concerns that Americans have. It's always a balance, right? And the KYC rules are in place for a reason. You want to make sure that bad people aren't using the financial system to do bad things. And so I think that's the origin of some of these requirements. But I do think it would be worth us as a nation, and this is a good moment to do it, to sit down and take a look at all of the financial surveillance tools that are in place and ask, are these serving the purpose? And if so, are they doing it at a cost that's too high? And by cost, I don't only mean dollar cost. I also mean cost in terms of privacy.
Well, we showed a graphic there on screen just on zk-KYC that that could be a technical solution, that especially starts to evolve with the current status of how maybe tokenized securities, as well as all these new companies, are starting to get into things in terms of how blockchain will be a part of this. So maybe that's a solution.
A lot of people are talking about that as a potential solution. I think that we need to still sit down and have conversations about, how would a possible solution like that work, and if so, is there still other work that we need to do on modernizing our approach to KYC?
Right.
But I think a lot of people are very interested in those kinds of solutions.
Last question to you is your wish list. What if you look at the task force right now? What is Hester Peirce's wish list right now?
I mean, my the task force is wonderful, and the people that we've been dealing with on the outside have been wonderful to work with. My wish list is just that we had more hours in a day so that we could get more done. It is very difficult to prioritize. And so that would be, if I could have anything, it would be more time to get more done.
There's only one way to do that. In Silicon Valley, we usually would put beds in our room. And you were constantly...
I'm not going to suggest that.
Not going that far. All right. Well, Hester, it's been great having you on the show today. Thank you so much, SEC
Thank you,
Commissioner.
Paul.
You guys make sure and get in on the Diamond Circle. That, of course, is our own email list. It kind of keeps you up to date with everything that's happening out there in the industry. Obviously, there's a lot going on right now. So join that. We always leave a link down below. And, of course, you can reach me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.